What's going on, guys? In this video, we're going to be talking about a 1-minute scalping futures strategy and how I believe that you should probably looking to be using it. Let's just dive right into it. I don't really want to waste a lot of your guys' time. My name is D. Anthony. Make sure to hit the subscribe button and the thumbs up on your way out of here. The best way that I believe to use a 1-minute scalping strategy is to pair it with a larger time frame. So on my chart, what we're looking at on the right-hand side of the screen is a 1-minute chart. And on the left-hand side of the screen, we're looking at a 15-minute chart. The reason why I like to look at a higher time frame is for confluence, is for bias. I don't really want to be going long if the higher time frame is showing me that we're breaking out, right? Because I could be going short in nothing more than a consolidation pullback for a continuation higher. So I always want to make sure, what is the bigger time frame telling me? And I want to stay with that trend. So for example, let's focus on the 1-minute time frame here and let's kind of look at exactly what's going on. If we look at the open, we had a little bit of a pop, followed by a drop, followed by, this is going to be a washout, followed by an immediate reversal here. So a lot of times traders will get kind of stuck in this move here, right? Where maybe you're chasing it off the open and then it pulls back and you break even or you lose a little bit of cash. And then now finally you think, hey, we're going to finally start to break down. So you take a short position here and only to see that you get stopped out. And it always kind of constantly feels like every time you go long, the market pulls back 15, 20, 25 points. Every time you go short, the market bounces 20, 25, 30 points. So by focusing on a higher time frame, you're going to get a good idea, especially if you stay a little bit patient off the open. My personal opinion is that if you can sit patient for about 15 to 20, 30 minutes off the open, you're going to fare much better than trying to take the first initial move. Again, there's a lot of traders with built-in strategies that trade the first 5 minutes, 1 minute, 2 minutes off the open, but they've been doing it for a while. They've got a lot of data that supports that type of trading. And if you're just someone who's very, deer in a headlights where the market's pushing up and you want to automatically jump long, the market's pushing down, you might automatically want to jump short, or even vice versa. The market's pushing up off the open and automatically you want to rush to short it off the first candle. The same thing if the market flushes off the open, you're immediately one of those traders who's trying to catch the falling knife and say, no, market's going higher, I need to bounce this. So this is a strategy that I would personally use. Allow the first 15-minute candle to at least print, okay? That's going to give you a good scenario where you can tell yourself, okay, what did this first 15 minutes worth of price action tell me? Well, for today's example, today is 5/9/2025, depending on whenever you guys are watching this video. So you guys can definitely go back and backtest this. Today's price action pushed up right off the open, okay? So you can see here on my 2-minute chart, we pushed up off the open, we kind of pulled back, and then we put in this high. But theoretically speaking, we had a lot of supply ahead. Okay, so we had this London high sitting here at around 288. We have our daily 200 SMA sitting at 305. For me personally, and this is just my opinion, but until we kind of break out over this area and we show that we're going to hold this, there was really no potential to go higher. Okay, it doesn't really matter which way you want to mark it up. Now you can definitely say, well, if I'm playing a small time frame, I can get in on this pop and get right out. True, but can you do it every day? There's a lot of times where you jump in long here and the market pulls back and stops you out. Next thing you know, you're looking back 10 minutes later and you would have made money, right? So sit out the first 15 minutes of the market. That's what I'm going to make a note of. 15 minutes. I want you guys to sit out, right? And then ultimately what I want you to do is I want you to kind of gauge that second candle as well. So inside that first 30 minutes, there's a hell of a lot of volatility, okay? Now there's definitely opportunities to make money. I don't want to steer you off from ever trading the first 30 minutes, but today is a prime example where it was pretty choppy. And if you were trying to go long and go short, you probably got ate up pretty good, right? Like the market pretty much spit you out. So in this particular case, what I'm looking at here is this 30-minute opening range, okay? So this 30-minute opening range, and I'll draw it on the screen for you. If you look at the high from the first 30 minutes and you look at the low from the first 30 minutes, one thing that I would tell you guys, even if you're trading the 1-minute time frame, is you want the best entry possible, right? You want to get the best possible price on your short. You want the best possible price on your long. So if you're being patient and you're going to be a consistent trader where you're not going to get faked out every single time, and you're not going to try to make money every single candlestick, and you want to be in this for the long haul, you're going to build that callus where you're going to be a lot more of a patient trader. And again, if you're sitting out the first 30 minutes, you're going to see a range start to be formed. In the first 30 minutes, this is technically to me a no trade zone. Why is that? Well, the market proved that it put in a high, but I'm being patient. I want to see what the reaction is off of that high. Market put in a low. Okay, great. So to me, the market is a little bipolar, right? In my opinion, the market doesn't really know if it wants to go higher. Market doesn't know if it wants to go lower. So what the heck on God's green earth am I thinking trying to decide where this market's going? I need to see something definitive. And if you see something definitive, that's going to come after the first 30 minutes of the market, right? Allow this price action to get settled in. Now, I'm not saying that every single time, 10 out of 10 trades, that just because you sit out for 30 minutes, you're never going to see a fake out. I've seen hundreds and hundreds of fake outs after the first 30 minutes. But at least it gives me some form of clarity where I can actually look at some structure. And what today's price action told me was this high was placed, this lower high was also placed. This low was placed, and we absolutely did nothing for 30 minutes. So in this period of time, I'm going to stay out of the market. And what I'm looking to really do is when we start to break through the lows, that's now going to be my indicator to get short. When we break through the highs, that's going to be my indicator to get long, because now I've got some definitive structure. I've got a high and low. I've got a channel that's being placed here. Imagine how hard it is to go long here and get stopped out here and go short here and get stopped out there. It's very, very tough to trade inside of a channel. There's not a lot of traders that I have met personally that have been doing this for less than a year, 2 years, that can successfully channel trade. Okay. And it is what it is, right? I mean, again, if you can do it, more power to you, but it's hard to do. Okay. I'll be the first to tell you it's hard to do. But if you see this clear range where we've made a high, we've made a lower high, we've put in a low, and the market's not going anywhere, what you really want to see is this channel to get broken. That's going to be your indicator to go long. That's going to be your indicator to go short. And because you're watching the 1 minute time frame, you're going to have the most picture perfect entry. So what you want to see have happen in a perfect world, okay, is the low needs to get broken. Okay, here's the strategy. The low needs to get broken, and then you need to see a back test. You need to see a retest. So we've broken the low, we're retesting the low. Here's where your stop loss can be placed in the middle of that big drop candle. You can place a stop loss right in the middle. You can even place a stop loss at the highs. If you were to place a stop loss at the highs of this particular candle that broke the lows here, you'd be risking about 27 points on the NASDAQ 100. I think any one of you guys would be comfortable giving up 27 points to potentially make a 1-to-1, a 2R, a 3R, a potential 4R trade. We are potentially talking about taking 100 points out of this market. Now, hand raised to God, are you going to catch a 100-point trade each and every single day? Absolutely not. I'm never going to steer you in that direction. But can you find 25-point moves? Can you find 40-point moves? Can you find 50, 60-point moves? Absolutely. Absolutely. If you start to trust your entry, because remember, you're trading off the 1 minute time frame. You're also looking at the 15-minute chart, your higher confluence chart. You're looking at the bias. Once you started to really break through 20,202, 204, which is right here, you're going to see that low be put in. And I'm going to mark this out, and it's going to show up on the right-hand side of the chart. You're going to realistically see that it was this candle right here at 7:19 Pacific Standard Time. That's the candle that we're going to use as a stop loss. That's the candle that's going to be our quote-unquote reason why we want to take this trade. Your higher time frame is also telling you that you're starting to break down. Your higher time frame is also telling you that you failed to take out London highs. Your higher time frame is also telling you that you're putting in a lower high here. You're putting in a lower high here. This is a clear down trending move that there is no possibility that we could potentially start looking long until we break this range, backtest this range, consolidate, hold, and then pop this range. There is nothing here telling us that we need to be long. So by looking at that 1 minute time frame, you're going to get that picture perfect entry here on the break of structure, allowing it to backtest for 1 or 2 candles and allowing yourself to get in on that confirmation and continuation to the downside by using that candle, that previous candle that broke your structure range, as a stop loss. Very beautiful trade that if you would have held to full potential, because everyone loves to know that you would make $1 million on every single trade, you would have been looking to get in on a break-in retest below 20,206. This dropped all the way to a price of 20,058. This is a 150 point move, and you would be giving up 25 to 30 points on this move. This was a 4 or 5 R trade. Now, again, you're never going to catch the whole move. Even if you're looking for a 1-to-1, you would have smashed a 30 point take profit very easily. Even if you were looking for a 2R trade, you would have smashed a 2R trade very, very easily, and you would have been able to wrap up your Friday and move it along with your day. So again, what am I rambling on about? If you're going to use a 1 minute scalping strategy, pair it up with a higher time frame chart for confluence. You want to be sticking with the higher time frame. What is this higher time frame doing? And can I find a picture perfect entry on a small time frame so I can limit my risk and my downside? I hope you guys enjoyed this video. Again, guys, if you want to trade with me, you want to get access to my strategies and the courses and the online community, I also offer a 30-day mentorship boot camp. You guys can get into a private channel in my Discord with about 12 other traders where we trade live each and every single day, and we kind of go over notes and we build out a strategy of our own. Definitely look in the links down in the description box below. You can get all that information there. Also, guys, Apex is 80% off. You guys can use my discount code DAnthony. It's at the upper left of this screen. Daytraders.com is also 90% off right now. Comes with a free Quantower license. I like them. They're good. I just got recently funded with Day Trader, so I'll let you guys know how that process goes. And also Top 1 Futures direct to sim funded. That link is also down in the description box below. All of the links will use my discount code. Definitely help support the channel. I will see all of you guys on the next video. Make sure to smash the subscribe button, guys. Make sure to follow me. Make sure to turn your bell notifications on. I will see everyone next week. I hope you guys all have a fantastic Mother's Day. To all the moms out there, happy Mother's Day. You guys are truly, truly appreciated. I will see all of you guys on the next one.